Hi guys, welcome back to another episode of Singaporean Talks Money. So today's topic will be about, should we just get started in investing now or wait for the stock market to drop again before getting in? So many at times, when we want to start investing, we always wonder, should I buy in now or to wait? So historically, the markets have always trended upwards. And so if you are in for the long term, it does not really matter when you put your money in, as it will in the long term trend upwards. So I have many friends who are interested in investing, especially so when the pandemic caused the drop in the stock market. I would guess that prices at that time was really attractive compared to today, when a few vaccine has been announced and prices are slowly going up again. So how can we actually know the best time to invest? The answer is no one knows. You could be lucky once or twice, but you will not be able to get the lowest point every time. And what if a bull market lasts for 10 years? Will you be holding your cash for 10 years? So just like in my previous video, where I talked about dollar cost averaging and lump sum investing, if you like a lower risk, you can consider dollar cost averaging to ensure your funds are spread out over a period of time. So I'll be moving on to an important concept, which is time in market is better than timing the market. So I'm sure you have heard of this phrase many times, and this is true in the long run because if you get dividends, if there is any, it will add up over time. And this will also allow compounding effect to take place by earning returns on whatever returns you got over time. So the longer you let your money ride out the ups and downs of the market, the more likely you are to have a positive outcome. And also because the stock market is a volatile place, but if you leave your money in there for a period of time, it tends to trend upwards and provide you with positive returns. So definitely, there are times when we feel scared to invest our money. And exactly why are we afraid to invest? So the first thing that really comes to everyone's mind is that the capital is not guaranteed. So many people are afraid of starting to invest right away because they feel that it is not capital guaranteed and there is a chance that they will lose all their capital. This is definitely true, and that's why we don't put all our money into the stock market, and we do something called asset allocation, and also to have an emergency fund on the side. This is to ensure that whatever money we're putting in for investing is not whatever we need in the short term. Definitely, if you do feel a bit afraid that is not capital guaranteed, maybe then you can also consider having fixed deposits or savings plans that ensure that your capital is guaranteed. But definitely in terms of your growth, it will be much lower. So another thing that makes us feel scared to invest our money is the fear of losing money due to the volatility. So what if I put my money in the stock market now and it drops immediately? This is what most people who are afraid to start to invest immediately feels. I have to admit that when I first started investing, I was worried as well and checked my investment frequently. And every time when I did a buy purchase, the stock price would then drop. And I would be thinking, hey, why did I even buy it then? But over time, I've realized that even if it drops right now, I don't have to worry so much about it because in the long term, I'm looking at the long-term effect and not just like today or tomorrow, what will happen to the stock. You need to educate yourself why you have invested in that certain stock or ETF, and that it will, in the long term, it will provide some form of rewards because you have done your research or checks. So even if you don't get back anything from it, at least you learn something and you tried to do something with your money. Of course, if the volatility affects you, it is then better to maybe stick to less risky vehicles for your money, which will usually mean a lower growth. So you definitely have to make sure that you're comfortable with what you're investing in. If you want to invest in something more risky, you should set aside a sum of money and be prepared to have some fluctuations. Having a mindset that fluctuations will occur over the short term can help. And if you see any fundamental change or feel that the company has changed from what it is, you do have to reconsider your investment and think if you would like to continue to be invested in it. So another thing is that most of the people are not sure on what to invest in, and this is something that really stops most people from starting to invest immediately. So many people have ideas of investing their money because to them they know that by investing in the long term it is good, and they currently have time on their side as they are young. But hearing so many options and with somewhat a limited budget, a lot of people my age want to hear and know what to invest in, but they're afraid to put in the money because there's so many options for them. So usually when I tell my friend about investing, I would always tell them that I cannot guarantee that whatever I suggest to them will profit them, and that they have to make sure that they are also aware of what they are investing in to ensure that they are doing their own due diligence. So sometimes they do suggest to me that they would prefer to have a robo advisor, and I think that it is great using a robo advisor because it's a great starting point and everything is just much simpler for you to start because they are able to do everything for you, and you can just place out what kind of goals you like or returns, and they will try to match that. So how can we make ourselves get invested right away? So the first and most important step is to overcome the initial. Taking that first step is always the most difficult. For example, opening an investment account. Definitely because there's so much things to invest in nowadays, we are more cautious of what to put our money in. So we first should know ourselves. What kind of risk appetite do we have? Can we take volatility? Are we looking for high returns? And if so, what type of asset allocation are we looking at? So by understanding yourself better, you will know what kind of investing style or how you would like your money to be allocated. Along the way, you might have a change of investing strategy, but adjustments can be made, and at least by then, you would have gathered more knowledge on investing. So don't hesitate. Once you have the basics and extra money saved up, the bottom line is the best time to get invested is right now. And so to conclude, the biggest investment mistake you can make is not getting started. Since the simple act of saving money is the most powerful tool you have at your disposal, and you just need to make sure that the money that you have saved are also working to grow your money. So I hope that this video has been informative for you. Thanks once again for staying till the end of the video. And please do like and subscribe to my channel for me to produce more content for you guys. Thank you.